Alright guys, so today the market let us down. We do not have a new all-time high in the SPY, QQQ, and that's when we see some people panicking and getting scared. But not here, not on this channel. We know very well that only amateurs, newbies, feel emotions when trading. There is no way you can feel emotions in the market when you trade with strategy and risk management. So let's see what we can do from now on, always with a practical focus. Let me share an unbiased and professional analysis with you here on this channel. Welcome to the Finance Hydra channel. My name is Nathan. It's a pleasure to see you guys over here. And yes, we see the SPY. It is not going down, but it is not going up a lot, right? Only 0.01%. What's the catch over here? We did try to lose yesterday's low. Yesterday's candle was a possible top signal. However, we failed in closing below yesterday's low. So technically, this top signal wasn't triggered yet. Now, that's a little bit different on the QQQ because the QQQ is losing yesterday's low and we see a clear bearish candle over here. So maybe tech stocks are going to lead the next pullback on the broad market, and that would be totally normal, totally expected. As far as I know, any pullback to the 21-day EMA on the SPY QQQ would be absolutely normal, not a reason to panic, just another possible buying opportunity near a support level with better risk-reward relationship. Now, although the SPY is not triggering yesterday's top signal yet, we see the QQQ losing yesterday's low, but there is another catch over here because, as far as I'm aware, the QQQ is still not that bearish yet. On the 1-hour chart, we see a possible head and shoulders chart pattern. See this key point 560. I told you guys yesterday, guys, the 560 is our major support level short-term wise when we analyze the 1-hour chart. Only by losing this support level, we are going to trigger a meaningful pullback on the daily chart because only then we are going to lose the previous low, the previous support level, and we are going to reject the uptrend observed on the 1-hour chart. And guess what? We found a support level right here, right above the 560. And some people out there, they don't believe that technical analysis works, right? I always tell you guys, blame the trader, never blame the tool. Technical analysis is an extension of what you are capable of doing. If you don't know how to read charts, if you are a terrible trader, then okay. Technical analysis is not going to help you, all right? This is for those who just like to study price action and who are ready to prepare and, of course, to study a lot how to do the right risk management. So, yes, we found a support level over here. Now, since we are bouncing off this key point, we found a resistance level right below the 21-hour EMA. This key point is right now acting as a short-term resistance level. So, if the QQQ loses the 560 again, we are going to officially trigger this head and shoulders chart pattern. Okay, officially trigger this reversal chart structure on the 1-hour chart, and the SPY shares the exact same chart structure over here. However, this one is still above the 21-hour EMA, okay? It doesn't matter, all right? It doesn't matter. If you ask me, by losing the 626, SPY will truly reverse the short-term trend, and we are going to engage in a pullback on the medium term on the daily chart, the medium term trend. So the SPY and the QQQ, they are both above critical support levels on the short term that could trigger a sharper pullback on the daily chart. So if you ask me, these key points are the trigger for the next correction on the indices. Let's see if they are going to maintain their prices above their inflection points, because as far as I know, let's say Nathan, SPY, QQQ, they are not triggering their head and shoulders chart pattern. What to do right now? Well, that's fantastic. They are going to just keep going up. In this case, what we are going to do is still focus on buying opportunities, however, in stocks that have better risk-reward relationship than the SPY and the QQQ, because they are still far away from their medium-term support levels, okay? They are both far away from their 21-day EMAs. So I prefer to trade stocks that are near their moving averages, that are near their support levels. Now, either way, guys, we should prepare ourselves for whatever comes next. And this is the most important, these are the most important inflection points for our main indices over here. And we see Nvidia. Nvidia is already triggering the top signal we described yesterday here on this channel by losing the 171. This red line over here. Why? Because this key point is a bearish pivot point. Nvidia is materializing the lower high, lower low. I did warn you guys yesterday. Now, what a funny coincidence, right? Now, we did correct a lot. We did reverse on the 1 hour chart. And guess where Nvidia stopped today? Guess what's Nvidia's next support level? The 165. This key point over here, see? Classic support level because it is closing this open gap on the daily chart. Remember, I always tell you guys, gaps work as magnets for the price when trends reverse. And seeing Nvidia correcting just to close this gap over here, and we see a short-term bounce on the 1 hour chart from this key point, is classical. All right, this is so classic. This could easily be in a technical analysis book, all right, which, by the way, I have an ebook that I share with you guys on our Telegram channel. It is totally free to download because you can join our Telegram channel for free for 7 days, by the way. Remember, guys, you can trade with me and receive my trading signals and strategies firsthand. Members of the 5% project trade with me in practice. Only there you will find out about our trades, what stocks we are watching, what we are going to buy, and which strategies to follow. Everything in detail so that you can learn once and for all how to trade professionally without fear or stress by gaining practical experience with us. It's totally free to try, okay? Again, free trial for 7 days. So come on and meet a community of hundreds of consistently profitable traders who know how to make money every single day in this market. So come on, link to my website is in this video's description, okay? Right here below in the description. Now, yes, this is a classic movement, could be on any technical analysis book or ebook. Now, by bouncing off this key support level, there is a chance that Nvidia could reverse and recover, etc. However, if you ask me, there is still no technical evidence supporting this bullish case. We are just making lower highs, lower lows on the 1 hour chart. Now, if Nvidia makes a miraculous recovery tomorrow, making a possible double bottom chart pattern above this support level, then alright, then I'll be more convinced about a bullish continuation chart pattern on Nvidia. But right now, there is no such reaction. Right now, so far, there is only a single bearish candle losing the previous support level, retesting the 165 gap target. If you ask me, we deserve a sharper correction, possibly to the 21-day EMA, But hey, who am I to know what's going to happen in the future, right? I do not know. I don't need to predict the future in order to trade well. So, yes, although a better correction would be plausible, especially if we see the SPY and the QQQ materializing their head and shoulders chart pattern, Nvidia could easily correct to lower levels, okay? Maybe even to lose this 21-day EMA. So for now, let's observe how Nvidia is going to behave near this gap support level. Technical target, amazing target. Nvidia is behaving so technically well, that is impressive. And we see Tesla, this one is going to report earnings tomorrow. Tomorrow, we are above the 21-day EMA. We did avoid a top signal because I told you guys yesterday, guys, we see a possible top signal right below the $335, which not coincidentally was the previous resistance level over here. Now, it is a resistance level again. So this is a very dangerous inflection point for Tesla. If we see any top signal in this area, let's not be surprised, and we could easily expect a sharper pullback. Now, this reaction kind of gives me some hope because by maintaining the bullish bias, let's take a look at the 1-hour chart. Yes, on the 1-hour chart, we still see a sequence of higher highs, higher lows. We are still above the 21-hour EMA, which, by the way, is still working as a support level. Now, by maintaining the uptrend on the 1-hour chart, we are not going to make any meaningful correction on the daily chart. In this scenario, as far as my humble experience knows, I see that we could seek higher levels after earnings because when Tesla is bullish, is maintaining the bullish bias before earnings, usually Tesla just follows the momentum, okay? Conversely, if Tesla is already in a bear trend, earnings could explode downwards, okay? We could collapse downwards. So it is a two-edged knife, okay? So it all depends on how we are going to maintain the price above this 21-day EMA. Of course, guys, when I say that when Tesla is bullish, usually Tesla explodes after earnings or the inverse, it is not a rule, okay? More often than not, Tesla only follows the previous momentum after earnings. And remember, earnings never change the medium-term trend. Okay, they never changed the medium-term trend. We never saw earnings changing the medium-term trend over here on this chart, all right? They only, although we see short-term volatility, in the end, the medium-term trend speaks louder, all right? So what to do right here on Tesla? Well, we could see an opportunity for swing trading if you ask me, but only if we see a clear reaction near one of its resistance levels or support levels after earnings. Okay, so that's what we are doing. That's how I am planning to do with me and with the members of our Telegram channel. Okay, so that's it. That's our plan. Of course, not investment advice here on this channel. Okay, please, I'm not advising you guys to do anything. I'm just sharing my ideas. Now we see AMD. This one found a resistance level right below the 158, which is absolutely not surprising at all because we have been telling you guys here on this channel, guys, gaps work as magnets for the price, right? This gap was closed right now and it is acting as a resistance level. Now, it is not this is not enough to change the medium-term trend. We are still doing higher highs, higher lows, all right? There are no lower highs, lower lows, okay? This is not a downtrend. This is a bull trend. However, we are making a pullback. Pullbacks are not reversals. As far as I know, by closing this gap over here, by making a bullish reaction above this gap, above the 21-day EMA, AMD could offer us another buying opportunity, period. Okay? But Nathan, what if we see a top signal triggered on the weekly chart? Then okay. Then we may see a sharper correction possibly to the 21 weekly moving average. But for now, we are still maintaining the price above many support levels, okay? AMD would have to lose many support levels in order to reverse this uptrend, okay? Therefore, I would be looking for buying opportunities near this support level. Not investment advice, of course, but that's what I like to do. That's how we like to proceed because we are trend trackers. We follow the money. We follow the smart money. We know that we can rarely we are going to nail the very bottom and sell the very top every single time, but that's not important. That's what amateurs like to do. They like to buy the very deep and sell the very top. And what happens more often than not? They fail in doing that because they don't have strategy. All that I know is that we can have an edge in this market using a clear strategy and, of course, waiting for confirmation and by following the main trend, okay? So that's how we like to do, that's how our philosophy works. Therefore, if you ask me, Nathan, would you short AMD near this key point? And the answer would be no, because that would be against the trend. We are doing higher highs, higher lows. So although maybe the risk-reward ratio would make sense, but still would be against the major trend, all right? So I do not like to do that. I prefer to buy stocks after a correction materializes when the risk-reward ratio is clear to me. Okay, that's how I like to do. Now, we see Palantir very close to the 21-day EMA. Very, very close. What's the catch over here? We saw Palantir collapsing. However, it failed in maintaining the price below the 148. I told you guys yesterday as well, guys. We see Palantir. We see a classic inflection point here on Palantir around 151. By losing this key point, Palantir could trigger a double top chart pattern on the 1-hour chart, triggering a sharper correction on the daily chart. And that's precisely what we see right here, right now. Once again, we did understand correctly this movement. Now, if you ask me, any bullish reaction could be another buying excuse. However, not for me. And the answer is very simple. Palantir is going to report earnings in 13 days. I do not like to trade stocks near earnings report because since I'm a swing trader, I like to give some time for my stocks to develop their movements, to actually materialize long, nice rallies because again, we are swing traders. We follow the trend for many days. We are not day traders, all right? We don't like to stress ourselves trading short-term noise. We like to capture bigger movements so we can nail nice, phenomenal rallies together. So if you ask me, Palantir is not necessarily for me, but I do understand that this one is maintaining the uptrend very nicely, okay? We do not see any crystal clear reversal. Although we see a pullback, although we see Palantir collapsing almost 2% today, there is no clear reversal yet. We are still maintaining the uptrend. Very simple situation for Palantir, and we see SOFI. This one is making what Palantir is doing, right? However, SOFI is going to report earnings in 7 days. That's even closer than Palantir's earnings. So, yes, we are making a pullback. We see a nice bullish reaction. We see a hammer candle pattern, okay? This reaction has a name. It is a classic hammer candle pattern, which does reverse the trend 60% of the time according to Thomas Bulkowski's studies. So yes, it is a statistically reliable candle pattern which does reverse the previous downtrend more often than not. What's more, it is above the 21-day EMA, and we are closing above the $20.74, which, as I told you guys last week, is the main inflection point for SOFI short-term wise. So we are still kind of sideways on the 1-hour chart, maintaining the medium-term uptrend on the daily chart, and of course, maintaining the long-term uptrend as well on the weekly chart. If we see SOFI closing below the $20.74 on the weekly chart, we could easily see a top signal suggesting another pullback to the 21 weekly moving average, okay? Earnings could help SOFI to collapse to this level. So let's pay attention on this key point for now, because it all depends on if we're gonna see a downwards breakout of this support area or not, okay? And we see Google. This one, unlike SOFI, Palantir, Nvidia, etc., it is not correcting at all. It is still maintaining the insane bullish bias. This one is going to report earnings tomorrow. Now, as I told you guys a few weeks ago, right? I believe last week or maybe 2 weeks ago, before Google made the breakout of this key point, I told you guys, by breaking the 181, Google will continue the bullish bias, and this one is going to approach the resistance line of this ascending channel. Because yes, Google is still maintaining the price inside an ascending channel, and this key point is our next technical target. We got very close, okay, very close to our target right here today, but since Google is going to report earnings tomorrow, I always advise you guys, if you are a swing trader, to not hold a stock during earnings report, okay? Google, AMD, Palantir, etc., it doesn't matter, okay? We do not hold stocks during earnings report for swing trading purposes, okay? If you are a position trader or a long-term investor, okay, that's not a problem for you. But if you ask me, let's say, Nathan, what if Google collapses after earnings report? What could happen to Google? Since Google is so insanely bullish, I see this one making a possible correction to our support level, okay? To approach the 21-day EMA or maybe even the 181 again, right? Of course, Google does not move that crazy after earnings, okay? We see that although Google moves a little bit crazy, it is not that crazy compared to other high beta stocks like Nvidia, Tesla, etc. It is a little bit less volatile, okay? So still, we have this major double support level preventing Google from reversing the trend. And again, remember guys, earnings rarely reverse the trend, okay? They only create short-term volatility that we could take advantage, all right? So if Google gets closer to this support level again, fantastic, possibly another buying opportunity. And we see Apple. Apple is going to report earnings in 9 days, okay? It is one of the stocks. I gave you guys a buy signal on our Telegram channel right here after the breakout of the 206. It is performing very well. It is near this resistance level, but since this one has a target over here, has an open gap over here, I still see more upside for Apple medium term wise, but I do understand that since it is approaching earnings report, we gotta sell it very soon, even if it doesn't hit our technical target, okay? So we gotta be very careful on Apple. Either way, it is totally impossible for us to lose money on this right here, right now, because it is not only way above our entry point, but it is right now reversing the medium-term trend, making higher highs, higher lows on the daily chart above the 21-day EMA. So it feels like Apple is under control, but if we see Apple losing the 21-day EMA again, all right, then we may see a possible double top chart pattern on the daily chart, and that could reverse the medium-term trend and frustrate our bullish case. Either way, I'm gonna keep you guys updated on this channel every single day, so if you are still watching this video for 24 minutes, you must like technical analysis, so come on, subscribe this channel because that's what we do. Every single day, we talk about stocks, strategies, risk management, trading psychology, etc. So you are more than welcome to join the Finance Hydra channel. We are here every single day. Click the like button to support me as well, and take a look at my website. The link is in this video's description if you want to learn how to trade professionally without fear, stress, and make money every single day in this market. Thank you very much for your audience, my dear friends. Stay safe. See you guys tomorrow. Bye bye.